Hi everyone. Today let's talk about GE. This is episode 4 in this series of me rolling GE for the entirety of 2021, and there may only be a few more episodes of this, and I'll tell you why that is later in the video. So first I'll talk about the news surrounding GE, then I'll talk about the recent price action, and I'll finish up with my current plan for GE and my current tracker for my GE returns. If you like trading stocks and options and making money, definitely like and subscribe. I make 2 to 3 videos every single week about various topics around the market, as well as my own personal passive and active portfolios. So definitely like and subscribe if you like any of that content. Welcome to the Portfolio Bulletin. Let's get started. So GE had their investor day, and they announced a potential stock reverse split coming up sometime in May or June. They also mentioned the fact that they did sell their aircraft leasing business for $30 billion to AerCap Holdings, which comes out of the GE Capital Aviation Services, or GECAS. And this means that they will shed the majority of their holdings within that part of their business, and they will use that money to slash up to $30 billion worth of its debt. In the terms of the deal, GE will receive $24 billion in cash, as well as 111 million shares, which will be an equivalent stake of 46% of the combined entity. So they're not exactly selling off the entirety of this business. They're basically selling half of it to AerCap Holdings, or Aero, and GE will get another $1 billion after the transaction closes, somewhere around 9 to 12 months from now. GE has already stated it plans to sell at least some of the stake sometime in the future after the lockup period ends, to further reduce its debt, meaning that they will have paid back $70 billion in debt since 2018, which continues to improve their overall market capitalization. Now, the question for me here is, I don't know exactly what they're doing with all of this deleveraging. Where are they going to start using the money that they were using to pay down these debts to either innovate or generate new revenues? They've continued to slash sections off of their business to make them more lean and more profitable. And as the CEO says, they continue to streamline the business. But of course, this is a business and they need to innovate and generate new revenue streams. But we haven't seen a lot of that as of yet, just continuing to cut off sections of the business that they deem are not viable, or the cash is worth more than what they think the business is right now. In this case, at least they're partnering with the company and not cutting off the business completely. So they are getting a good chunk of cash, but they are retaining 46% stake in the combined company, meaning that they can still benefit from this line of business as they continue to participate in the jet leasing behemoth. The article also mentions here that they will retain their legacy insurance business as well as the liabilities that have plagued the business as part of their GE Capital division. And then they mentioned the 1-for-8 reverse stock split. So they did some comparison with other companies of their market capitalization, and they realized that most companies of their size have a little bit more than 1 billion shares outstanding and a share price of a little bit over $100 per share. And for GE to fall in line with that, they need to do an 8-for-1 stock split, which is what they are going to propose to shareholders in their GE annual meeting on May 4th. So this is what I was talking about, and me not being able to roll GE for the duration of 2021. If this reverse stock split goes forward, I don't really want to own 100 shares of GE, which would be the same as me doing 8 contracts of the current stock price. That's not really what I signed up for when I started this series. I was willing to purchase 100 shares, certainly at the price that it started, closer to $10 per share, and even all the way up to $12 to $15 per share, I would be willing to buy those shares. But if this goes through and the stock price goes up to like $120 per share, I'm not willing to buy $12,000 of this stock in order to keep this series going. So I may look for another stock, something that's closer to this price range that I'm still bullish on, to keep this series going. I've looked at companies like Tattooed Chef or other companies that are in this price range. Maybe even Ford Motors is another company that I'm pretty bullish on at current prices. So let me know down in the comment section if there's any stocks you think I should move over to. But like I said, I won't do that until this reverse stock split is finalized. Until then, I will continue to maintain this position going forward. Moving on to the price action here, you can see we got started on December 31st right here at around $1.80. And since then, it's been basically straight up all the way up to almost $14.50. And since then, we've had a pretty classic M pattern here. I did want to add in these trend lines real quick. You can see we had a nice reaction to that previously on this M pattern, and we stopped right on that trend line previously. If we see a break of this trend line, I suspect we'll get support in this level. As I'm still pretty bullish on GE, I just think it was a little overvalued here at $14, which is why I didn't chase all the way up into this price action. In terms of rolling my position up, currently my break even is down here at $10.88. So it would have to go all the way down to basically where I entered the stock before I started losing money. And this continues to be a recovery play. Moving to my actual option position, you can see I did roll it up a little bit to $12.50 from $12, but I also rolled up my protection as well quite a bit. I was risking $4 previously. Now I'm only risking $3. And this is on purpose because I did suspect that we were a little bit overbought at the prices that I mentioned. So I took a little bit of risk off the table. And this gives me some room to roll down these puts if we do get challenged and take in a bigger credit as the stock continues to go down, which is generally one of my strategies before actually having to buy the stock as part of the wheel strategy. You can see I did get another 45 cents credit, not a true 45 cents as I did have to pay 18 cents to close the previous position. So really I only took in a 27-cent credit for that adjustment, but it's good that I'm continuing to take in a little bit of credit here as I was getting down to April 16th for expiration, and I do prefer to stay around that 45 days to expiration, which the current closest date for that is April 30th. Finally, finishing up with my GE tracker, you can see my current price is now $12.50. Protection here at $9.50, so $3 credit spread. I closed the previous position for 18 cents here, and then I got a 45-cent credit here for the new position, putting my cost basis at $10.88. Since I haven't closed this position yet, the current close price is $12.50, just helps out with the calculations. So I've received $1.62 so far, and I'm only risking $3, so that percent gain is 54%. And if that were to be annualized, it would be 250% over the course of the year. Of course, this assumes that we don't get too much more downward price action, but it doesn't matter too much because I will continue to take in credits throughout the year, assuming that GE doesn't do their reverse stock split, which seems unlikely. So let me know down in the comments section what you think of GE's business going forward. Should they continue to streamline or should they maintain where they're at and start to innovate in the businesses that they still have? Will you maintain your position after the reverse stock split, especially if you're trading options? I'd like to know what you plan to do about that. Like I said, if that does go through, I don't think I can maintain this series as I don't really want to own $12,000 worth of GE stock. So let me know down in the comment section what other stocks I should continue this series on. Generally in this $10 to $20 price range is good. If you got any value out of this video, definitely like and subscribe. My next video will be my overall portfolio overview, so definitely make sure you hit the bell so you don't miss out on that content. Of course, none of this is financial advice. This is all for entertainment purposes, and have a great day.